While the stock market is still figuring out whether or not a good and functioning economy is good for stocks, let's talk about 5 companies that could still provide investors with significant upside in the next 12 months. These are the 5 companies we're going to cover in this video in no particular order. I do hope you keep watching, and if not, at least hit the like button and subscribe. The goal is to reach 100,000 subscribers in 2025, so if you're new here, hit that red button. It's free and you help me out, so thank you very much. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So company number 1 we're going to touch on is Aspen Aerogels. It's actually the first time I cover this company on the channel, and it comes at a request from one of the live viewers I had on the recent live stream. This company has a market cap of just over $1 billion. What do? They basically make super insulating materials called aerogels. These are used to prevent heat transfer in extreme environments. Now, right now, you can see that the forward PE sits at 27 times. But then if we go and look at what the analysts are expecting this company to do, we can see that already in fiscal 2024, this company is growing the top line, which is sales, quite quickly, 88.69% year-over-year growth. Then in fiscal 2025, growth is decelerating, still growing over 10%, but then we see a reacceleration in growth in fiscal 2026, while EPS is growing even faster. Looking at the average analyst price target, that sits 136% higher than the price we're at today. Looking at some pricing metrics, we don't really have that much to work with. Forward PE, well, there was no E before, so that of course sits lower than the 6-month mean. EV to EBITDA is much lower at 11.6 times, and price to sales is also lower at 2.2 times. The company is becoming more and more profitable. We can see that here with the year-over-year growth for net income. So in fiscal 2025, net income is expected to grow by 97.7% and then another 64.8% in fiscal 2026, while still not generating free cash flow. But what we did see is that gross profit margin since 2022 did improve quite significantly. It went from 2.8% back in 2022 to now 41%, and of course a huge increase in gross profit. And now we're seeing that net income is basically close to break even, or at $1.5 million for 2024. Last quarter, we've seen that revenue increased 93% year over year, and we've reached adjusted EBITDA margins of 22% compared to, negative 12% same quarter last year. If we go and look at the outlook that they provided, previously the outlook was for 2024 that they will grow revenue by above 63%. Now that number will come in around 88% year over year growth. Adjusted EBITDA up from 15% to now 20%, and that's $90 million. Net income, $9 million instead of over $7 million, although they do say that that updated outlook includes a $27.5 million one charge from the redemption of the company's convertible note back in August. Then, of course, this company, they offer different aerogel products like blankets and panels for one, high temperature used in industrial settings like refineries and power plants, very low temperatures used for storing and transporting liquefied natural gas, and then EVs used in batteries to prevent overheating and improve safety. And of course, there are quite a lot of tailwinds in those industries, especially in the EV market. So I thought it would be an interesting company to study in this video. It's a first look at the company. In my opinion, it does provide a significant upside if you're, of course, interested in that industry. Moving on to the next company, and that's Grab. Grab is still sitting under $5, actually $4.46, has a market cap of just under $18 billion. Yes, year on year, the stock is up 38.7%, but if we zoom out a little bit more, it's still down 26.24% in the last 3 years. Don't be afraid of that forward PE. It's forward PE of 140.5 times, but as you can see, they're expected to more than double earnings from fiscal 25 to fiscal 2026. And previously there was no E, so that's definitely not a metric I would focus on right now. Looking at the average analyst price target, that sits 24.25% higher than the price we're at today. And then with regards to pricing metrics, again, for a profitability standpoint, we don't really have that much to work with. EV to EBITDA is lower, price to sales is also lower. Looking at free cash flow growth, of course, we're seeing huge increases already in fiscal 2024. Then in fiscal 2025, free cash flow is expected to grow 24.8% and then another 10.8% in fiscal 2026. Where do they generate revenue from? Well, this small segment here is financial services. That's also the fastest growing one. Grew 77.78% since the March quarter of 2023. Then we've got mobility revenue that increased by close to 40% since that same period. And then deliveries revenue, that's the largest segment right now, 29.25% growth since March 2023. As for gross profit margin, here as well we can see huge improvements since Q1 2023. Gross profit margins went from 29.1% all the way to now 42.9%, and net income did turn positive. Looking at adjusted EBITDA for the different segments, financial services, just like with every other company that's starting small with financial services, adjusted EBITDA for that is still negative. Deliveries was negative at the start. Now that's positive. That has grown quite quickly actually. And then the largest segment here is mobility. That's quite profitable for them. I think with Grab, as long as it's under $5, I think it's worth grabbing. Yes, I know. Very funny. I know. Thank you. Anyways, moving on to the next company. That's a semiconductor company, more in the equipment making segment of the semiconductor industry, and that's Lam Research. If I were to open a position in that segment of the semiconductor industry, it will probably be Lam. Lam right now has a market cap of $97.97 billion and a forward PE of just 21.2 times. Lam Research also pays a dividend, has a dividend yield of 1.21%. If you look at the expected growth rates for this company, you can see that it's expected to grow sales at a decent rate, but EPS is expected to grow faster than that in each of the following fiscal years. Looking at the average analyst price target, that sits 20.8% higher than the price we're at today. And here, if we look at the pricing metrics, yes, it's true that price to earnings, EV to EBITDA, price to sales is a little bit higher than the 5-year mean. Price to free cash flow is a bit lower, but price earnings to growth sits at 1.32, which in my opinion is still not that expensive at all. With regards to free cash flow for fiscal 2025 is expected to increase by 16.2%, and then in fiscal 2026 expected to be flat to down-ish, and then we see a reacceleration of 15.2% year-over-year growth in fiscal 2027. Looking at where they generate the majority of their revenue, we can see a large part comes from China, and that's the risk attached to it with the exports and all of that. I do think that that will change in 2025. Plus, you can see that that segment did grow quite rapidly compared to the others. In June 2019, that was at $2.16 billion. That basically increased 185% since. The second largest is Korea, then Taiwan, then US, Japan, Southeast Asia, and Europe. And like I've spoken about in past videos with ASML and all of that, where a large part of the revenue does come from China, I do expect that to change. I think management expects that to change as well, and other regions will compensate on that. Also, with regards to the exports, I do think that a large part of the exports and the restrictions are going to go away or at least adjusted. So Lam definitely a key player in the industry, and in my opinion, the stock is definitely not on the expensive side. Moving on to the next company, that's a company we did touch on a couple of weeks ago because, well, the stock took a major hit. And that's Novo Nordisk. Novo Nordisk is down 30% in the last 3 months. Year on year, it's down 22%. It has a market cap of $370.9 billion and a forward PE of 23.1 times. If you look at the expected growth rates, top and bottom lines, in my opinion, that is quite decent, even for a company of that size. Even with that forward PE, I mean, you cannot go wrong with that. Looking at the average analyst price target, that sits 38.12% higher than the price we're at today. And then here, looking at some pricing metrics, forward PE, EV to EBITDA, price to sales, all lower than the 5-year mean. Price to free cash flow is a little bit higher. And then here, price earnings to growth, 1.26. Again, definitely not on the expensive side. Looking at free cash flow growth, we can see that in fiscal 2025, free cash flow is expected to grow by 38.4%, and then another 28% year-over-year growth in fiscal 2026. course, it comes at no surprise that the big chunk of the revenue comes from the United States, then Europe, Middle East, Asia, rest of the world, and then China. Although China, with them entering the Chinese market with the weight loss drugs, I do expect that market to increase quite rapidly. And of course, in the United States, the large part of the revenue does come from GLP-1. Then we've got insulin revenue, obesity care, rare disease revenues, and the other diabetes care revenue. I know that when we talk about Novo Nordisk, it's also worth mentioning that you can always go with Eli Lilly. I think both are great choices. Just put Novo Nordisk here because the stock did take a heavy hit, down 30% in the last couple of months. Still an excellent company, great management, good revenue profitability profile is also quite good, and it's not that expensive, so it's definitely worth putting on your watch list. The last company I want to touch on is more in the solar side of things, and that's First Solar. Now, First Solar, unlike many other stocks in that sector, let's say, although it's not really as exposed to commercial and direct consumer, it's actually up 16.4% year on year. It has a market cap of just under $20 billion and a forward PE of only 9.7 times. And I'm saying only 9.7 times because if you look at what the analysts are expecting this company to do in the next 2 fiscal years, this company is expected to grow top and bottom lines extremely rapidly in the next 2 fiscal years. Looking at the average analyst price target, that sits 42.7% higher than the price we're at today. Switching to pricing metrics here, forward PE, EV to EBITDA are lower than the 5-year mean. Price to sales is actually exactly at the 5-year mean, 3.7 times. Price to free cash flow, that's in the last 12 months, non-existent. I'll show you in the second why. And price earnings to growth, 0.3, very, very much undervalued. And here you can see why there was no price to free cash flow metric because, well, free cash flow was not there. But in fiscal 2025, free cash flow is expected to be just above $1 billion and then grow to $1.652 billion in fiscal 2026. Looking at gross profit, net income, and gross profit margin, we can see a huge rebound already and recovery since Q4 of 2022. Now you might say, oh, usually you say it's better to pick these types of stocks up when we see a recovery and not when margins are peaking and earnings are peaking. And I agree. But as I've shown you here, this company, unlike many other cyclical companies, this company is actually expected to grow quite quickly in the next 2 fiscal years, and we're quite some ways from their stock's all-time highs. Again, you don't always have to go back to the all-time highs because it could have been that previously they were overvalued and now they're not anymore. But when you look at the expected growth rates for this business, I think it's definitely worth putting on your watch list or maybe even on your buy list if you are interested in these types of companies and giving you exposure into solar and all that infrastructure. So what do you think? Do you own any of those companies? Are you planning on putting them on your watch list? Let me know down in the comment section below. Enjoy this type of videos, hit all the buttons, like, subscribe, do all of that, and I see you all in the next one. Bye bye.